So paradoxically, what the Fed is actually doing now is making the CPI higher. It's making it a bigger number because it's actually raising prices. And so there's no chance that we're going to get back to 2%. You know, that's in the history books. Those years were an aberration because everything the Fed did to temporarily suppress the CPI back then is now catching up to us, and it's all going to push up the CPI. And that's even with the fact that the CPI isn't even capturing the real degree to which prices are rising, and that's by design. The way I usually look at it is whatever the CPI is, just double it, and that's closer to what's actually happening. So if the government says 8, it's probably 16.
Economist Peter Schiff has made a forecast that the U.S. Federal Reserve will eventually abandon its battle against inflation and instead focus on tackling an even greater fear, such as a total economic collapse, a financial crisis, or a sovereign debt crisis. Schiff believes that the time of decreasing inflation rates is behind us, and that we will now witness an increase in inflation. According to Schiff, simply increasing interest rates will not be enough to solve the problem. He believes that there needs to be a significant reduction in consumer credit and an increase in lending standards to prevent consumers from continuing to spend recklessly. The economist has warned in the past that the actions of the Fed could result in a financial crisis and a much more severe recession than anticipated by the central bank. Prior to moving towards the video, make sure you subscribe to our channel and hit the bell icon so you never miss any upload of ours.
Low probability they will hike at least 25. That's pretty much baked in the cake. But even then, even if they hiked 50, that would leave the Fed funds rate at 5. And even if you believe the government inflation numbers, which I don't, the year-over-year CPI increase is more than 5. I mean, even the PCE, which is an even less accurate way to measure inflation than the CPI, even that is a year-over-year increase of higher than 5. So that means even at 5%, you're looking at negative real interest rates. You can't really fight inflation with negative real interest rates. You need positive real interest rates. You need interest rates that are above the rate of inflation. And we don't have that. And we're not going to get that because we can't afford it. And also, in order to really bring down inflation, you need to see a contraction in credit, and we're not seeing that. We're seeing credit expanding. We have record high credit card debt and record low savings rates. So consumers have not altered their behavior as a result of the Fed rate hikes. They're not saving more and borrowing less. They're saving less and borrowing more. And they continue to spend everything they earn and then some, and that puts upward pressure on prices. And the U.S. government has not cut spending, which is what would be required to fight inflation. Spending is increasing, and so are the deficits necessary to finance it, which puts a lot of pressure on inflation upwards because now the central banks ultimately will have to do a about face on QE and go back to quantitative easing in order to finance these deficits. Otherwise, long-term interest rates could explode higher if the government needs to finance the debt privately. And, you know, a lot of people don't realize how difficult it is, right, to get that inflation genie back in the bottle.
The January CPI report has cast doubt on the notion that the Federal Reserve has successfully curbed inflation. Although the annual CPI rate dropped slightly to 6.4%, prices increased by 0.5% on a month-on-month basis. Peter Schiff has pointed out that inflation remained below 2% for 7 consecutive years during the late 1950s and early 1960s before gradually rising in the late 1960s. In the following decade, inflation remained above the 2% target, only returning to that level in 1986. Even with the average Fed funds rate at 14.35%, the CPI still rose considerably in the late 1980s and early 1990s. He further pointed out that if you run the current data through the old CPI formula, price inflation was worse last year than any year in the 1970s or 1980s. And it's not getting any better. Take a look for yourself.
Fed never achieved a 2% CPI until 1986. That was 6 years later, by the time the inflation got down to 2. And in 1986, you had a Fed funds rate hit a high, I think, of 16% in 1982. Well, we're not even at 5 yet. So if it took 16% back then to get the inflation rate down to 2, and it's not like it stayed at 2. The Fed got to a 2% inflation in 1986, And then it took 12 years to do it again. All the years between then were way above 2%. So now you have Powell saying, oh, we're going to get inflation back down to 2% and keep it there. Good luck. I mean, the only time the Fed ever achieved multiple years of 2% or lower inflation was during the years that immediately followed the 2008 financial crisis, and those were flukes. And this is part of the irony of it. When the Fed lowered interest rates to zero, which was creating inflation, that actually helped push down the CPI because interest is a big cost for everybody. Businesses have interest costs. That's like their raw material costs or their labor costs. And so as interest rates went down for businesses, they were able to pass on the savings to their customers as were lower because interest rates were lower. Also,
Schiff has warned that if the U.S. struggles to issue new debt, the Federal Reserve will have no choice but to print more money, leading to rampant inflation and causing people to abandon the dollar. He has recently predicted that inflation will continue to worsen, leading to a crash in the value of the U.S. dollar. According to Schiff, an inflation rate of 4 to 5% compounded with zero interest on dollars is a recipe for disaster. He believes that the collapse of the U.S. dollar is a possibility. If Schiff's predictions are accurate, interest rates will need to be raised to combat inflationary pressures.
Because the national debt keeps on growing by a couple of $1 trillion a year, and imagine what's going to happen to it during the next recession. So, let's say in a few years, the national debt, right now the national debt is at 31.5 trillion. But let's say, 10 years from now, assuming we can get that far, it'll be at least 50 trillion. And if the cost on the national debt is, let's say, 6% interest, which would still be pretty low, that's 3 trillion a year. Assuming the rates stop going up at 6%, so it's impossible to finance this. This is a powder keg. It is a disaster waiting to happen. Every Fed chairman, including Powell, will admit that this is unsustainable. They just don't think we should do anything about it. They just think the time to do something about it is later. The time to do something about it has long since passed. I mean, we're beyond the point where we can actually do something about it. The mainstream Wall Street people still don't get that the Fed didn't solve a problem that the market caused. The Fed caused the problem and then prevented the market from solving it by making it worse. And so now the ultimate we're going to have to deal with in this coming financial crisis will be much worse than what we would have had to deal with back in 08, 09 had the Fed not intervened and let the market try to repair the damage that the Fed created.
Schiff has expressed concerns about the state of the U.S. economy on multiple occasions, including his prediction at the end of last year that inflation would worsen and the U.S. dollar would have one of its worst years ever. As a well-known market bear, Schiff has been making similar arguments for many years. While there have been indications of inflation, the rate is still below the target established by the Fed, which is why the central bank has considered tightening monetary policy in recent years only to ease further due to economic pressures. Although inflation has affected the markets, it remains below target. What are your thoughts on Peter Schiff's perspective? Feel free to share your thoughts in the comment section. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thank you, and we'll see you in the next one.